All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. We're looking at a market right now that's down about 2 points here this morning, where it sits, and it's a decent mix in terms of gains and losses out there. If we come and we look at an index watch where we can look at the entire S&P 500 and look at what's going on. Let me pull it up here for you. But we can see there are 200 advancers versus basically 300 decliners. So we still have much more red than green. But you can see most of the red very much off of its lows here this morning. A couple exceptions with Bristol Myers and UTX and some things that have had some news on them. Here's UTX down pretty big down here. But overall, this is a market morning that has had a few fireworks. We talked about those few fireworks this morning, and it's one that I think is a morning that matters. There are some mornings that just you look at and you go, okay, this has nothing to do with anything. But take a look at the volume here on the market this morning. It's not huge, right? It's not huge. But if you compare it to yesterday or Friday or even Wednesday of last week, it's significantly greater. There's more volume coming into the market this morning than what there has been in a little while, and that tends to signify that the price action's more significant, that the price action matters a little bit more, and it's one that for me, I still contend that as long as yesterday's lows hold, the bulls have more advantages in terms of some short-term bounce coming into the market. As long as yesterday's lows hold, if yesterday's lows break, that can switch very, very quickly here. But when we look at the breakdown of the sectors that are moving today, industrials are getting hit. Consumer staples are leading. Utilities are leading, right? It's not exactly the most bullish of sectoral breakdowns. Financials are joining that, but materials, industrials, they're getting hammered here, this morning, and some of that due to UTX, UTX here. So it's definitely an interesting morning, and as I look at it from a trade standpoint, right, and look at kind of how things are, right. Here's Apple. I know everyone's concerned about Apple, and let's face it, Apple has not moved very much. For the news that was, for the drama that is when it comes to Apple, and I know, yes, once we're in a trade, it feels like it moves a ton, right? But in terms of the reality of how much Apple has moved over time and how much it has moved on this news, it really hasn't moved much. It really hasn't done much. That tends to be a little bit more bullish than bearish. I still contend that if we're talking about Apple in the green today after the news that's been, there's another $6 to $8 higher here this morning. And as I said to one of you this morning, look, I know Apple was down $3 this morning, but as I looked at it, I said, you know what? It'll be more painful to miss the next $8 higher than it will to get out $1 lower. So I'm willing to take that little bit of risk. Now, it's rallied since then, and I kind of look at it similarly, but it'll be more painful to miss the $6 to $8 up than potential another $2 down from where it sits right now. And I'll continue to look at it that way, at least here this morning until there's more data to analyze and take a look at here. So running here with Apple, I do have the $200 on FedEx, maybe down a little bit here this morning. I need this to pop above 226 and go. You can see what this has done on the hourly. 226, 226, 226, 226. And you know what? It's getting there off higher lows. Off of, higher lows and hitting this 226. If it can break 226, there's some good stuff there for it. But I don't have much time, right? It expires on Friday. I was asked yesterday, why not roll it? Well, I have $200, right? It's worth $200. I could roll that out, but I'm not going to get any reward potential for it. The only way rolling it makes any sense is to add more money to the trade, and I'm not willing to do that here with FedEx where it sits. I'm absolutely not willing to add more money to the trade here overall, and as I mentioned yesterday, if I had more risk, it'd be something I probably would be backing away from, not digging my heels in. So that's kind of how I'm looking at it there. And we could get that pop. There's no sign of it here today. UPS is trading very similarly. Here to FedEx. We did get some Amazon data that this has been Cyber Monday yesterday. It was the best Cyber Monday on record. In terms of sales for Amazon. And so is the market really reacting to that in a big way? No, but it is, it continues to be the positive news that's lost in the headlines and nobody's really looking at right now, out there. It's a very negative environment. It's very much an environment where the negatives continue to dominate the headlines, and rightfully so. That's what people read, right? That's what people get excited about. If they just put good news up, nobody gets excited. So anyway, UTX, really dragging on the industrial sector here today. This is one where I look at it and I go, okay, is there something to be had here? But they're breaking apart. They're essentially separating into three companies here. I don't know. As I kind of look at it, I don't know exactly how this really is going to play out with some of the way they're manipulating the numbers. And I think the market reaction is one of, what the heck? What's happening here? And sell first, ask questions later. I do think the pieces will ultimately get bought up, but it is one that, for me, I'll kind of back away from for a while and kind of see how that develops. So it is coming off my watch list as far as for trade potential going forward here with it. So anyway, that's that big mover in terms of UTX. I did find it interesting this morning that market down. We had the negative Apple news, and Micron opened down and rallied early. Found that to be really interesting. And here's the hourly chart on Micron. And, Micron based out down here, made a nice rally, pretty bullish rally right here. Had a little bit of pullback, rallied, and then with the market pulled on back again. Came back to 34, held on to these lows, really didn't spend much time down here. Got bought up very, very quickly. And if you look on Friday, it gapped on down, right, and was bought up. Yesterday, it gapped up and was sold off. Today, it gapped down and was bought up. And, very, very interesting action. One that I'd love to have some fingers in here, but I don't have a trade signal, just yet that I'm comfortable with running with here. It is one where you can see this lower Bollinger and how that's come into play. And, the price action looks a little more compressive than directional right here. So I'll continue to kind of hold off a little bit, but it is one that I do think if it gets here to around 35 again, very, very tempting to pick up and to, maybe bottom pick a little bit with it if we get that, if we get that scenario come into play. So, bottom line, some heavier volumes this morning, but not exactly a bullish mix in terms of what's rising and what's falling. It continues to be a market where the metrics, the market internals, are pretty neutral. We saw a big move up in the bullish percent index, but not enough yesterday to signal a bull signal. We have the number of stocks hitting hitting new highs versus new lows, like the NYHL. Still sitting up here in this minus 75, minus 50, so still more lows than highs. And that's probably going to continue. A lot of stocks are going to need some massive rallies to go and set new highs. Most of the stocks out there now that have been trading and holding up and holding near their highs after the first round of selling and after the second round of selling, they failed to hold up on this third round of selling. Okay, so I still look at the market more as it's still that little more short-term trade environment. Going to continue to be choppy. I'm watching Under Armour here today. I got out yesterday. You can see the volume yesterday. I mean, there just wasn't any. Over the last 3 days, this bounce has not been one on volume, and you can see the Bollinger's kind of compressing here. But this is one where a little bit of flat and a little bit of down. We'll make it a very tempting proposition here, very tempting entry. I did ultimately have to get out yesterday as, the option compression here could be a little too much. But, if we come and we look at, where the options are trading, they're not too bad. There's still some value to be had here in them, but the spreads are a little too high for my liking right here with Under Armour, and, something that I'll wait on here a little bit and see if we don't see a little more tick down in the implied volatility and see the spreads come down just a little bit more here today. All right. So bottom line, for now, I'm holding my Apple, holding my FedEx, not going anywhere with those. Still have plenty of cash to put into play. We'll be looking at the Microns and the Under Armours, Chipotle, some of those. But again, that theme of the option implied volatility risk is still very, very, very high. It is one where this morning we see the VIX up, and so implied volatilities are generally on the rise a little bit this morning. So it's not a cheaper environment to be buying options in. That said, man, the VXX puts are sure tempting. I just wish the applied volatility on them, the pricing on them, were just a little bit better. And by the end of the day, it sure might be. We might see that. Thanks for hopping on. Have yourselves a great one. I'll keep my thoughts posted into the main feed here today. We'll talk to you later. Take care.